The reason why we're talking about Aeropostale is because we have an earnings peg today. They come out this afternoon with their report. Analysts are estimating about 23 cents per share in earnings, revenues of about $776.5 million. Now, here's the interesting part, because ahead of these results, guys, options trading volume yesterday, 7 times the average volume over the past 20 days, and 80% of the contracts traded yesterday, bearish put options. We're also seeing that same kind of options action today. Going into today, at least for right now, we're seeing about 450 of these call options, bullish bets, versus 1,600 bearish bets again today. So we're seeing Aeropostale stock up about 2.5% heading into the number. But there is a lot of activity with people looking to hedge some of their positions, perhaps, or take a bearish view on this. And what it comes down to is this is a stock that's volatile. We talked about Netflix. We talked about Facebook. The options market is pricing in an up or down move of 11% in this stock after those numbers come out. And that's the reason why a lot of traders care, because it's where the action might be.
Well, when these guys report, the stock goes crazy. I mean, the results are often very different than the analyst estimates, as I always like to point out. That means the analysts got it wrong.
Correct. They got it wrong.
But as a result, the stock really swings on these calls. I mean, I remember, I think a couple, 3 quarters ago, it moved like 25% right after the call. The next quarter is up 6% right after the numbers posted.
And what it says is the options on Aeropostale cost so much because, again, the idea that you have to buy a put option and buy a call option together to hedge out both sides of a transaction, that increased cost is what's implying that 11%.
Or more importantly, I want to know who's buying their wardrobe there.